In a surprise shakeup at the U.S. Federal Reserve, President Donald Trump has nominated Stephen Miran to serve as a Fed governor, filling the vacancy left by Adriana Kugler's early resignation. The timing? Just months before the 2025 presidential election. The implications? Huge. Miran, a staunch economic voice aligned with Trump, is now poised to gain a powerful seat on the Fed's interest rate setting committee, at a time when inflation remains stubbornly high and global markets are hanging on every Fed decision. So, what does this mean for interest rates, financial markets, and the independence of America's central bank? Buckle up. We're breaking down everything you need to know about Miran, the nomination, and the bigger picture. Let's start with the basics. The Federal Reserve plays a crucial role in managing the U.S. economy. One of the most powerful tools it has is setting interest rates, which directly impact everything from mortgage costs to business loans. The person Trump has tapped, Stephen Miran, is not just a random economist. He currently serves as the chairman of the Council of Economic Advisors and has been a key architect of Trump's trade and economic policy. With Adriana Kugler resigning before her term's end, the president had the opportunity to install someone who shares his views on tariffs, inflation, and monetary tightening. And that's exactly what he's done. This nomination could tilt the balance of power within the Fed's voting structure, at least in the short term. Stephen Miran may not be a household name, but in economic and policy circles, he's a known player. A former Wall Street strategist and academic economist, Miran gained more prominence after joining Trump's second-term administration. He's been outspoken in support of global tariffs and skeptical of the Fed's traditional approach to inflation. In fact, Miran has been vocal on TV and in op-eds about the need for what he calls real-world economic thinking, often questioning conventional monetary policies. He's also known for being data-driven and unafraid to challenge norms, which makes his addition to the Fed board both intriguing and controversial. His appointment is temporary, set to expire in January 2026, but even short-term influence at the Fed can have long-term impact. This opening on the Fed board came unexpectedly. Adriana Kugler, appointed by President Biden, announced she would be stepping down early to return to Georgetown University, where she serves as a professor. Her original 14-year term was supposed to run until 2038. Kugler had recently voted with the majority to keep interest rates steady, citing lingering inflation concerns and global trade uncertainty. Her early departure raised eyebrows, particularly because it allowed President Trump to quickly appoint someone more ideologically aligned with his economic agenda. While her exit was framed as a personal academic decision, it has political and economic ripple effects that go far beyond one vacant chair. Miran would become Trump's third appointee to the Federal Reserve Board, following Chair Jerome Powell and Vice Chair Michelle Bowman. That's significant. Although Trump has frequently criticized Powell, sometimes harshly on social media, he now holds increasing influence over the institution. Bowman, in contrast to Powell, is closely aligned with Trump's regulatory agenda and has worked to roll back some of the tighter banking regulations imposed after the 2008 financial crisis. Miran, if confirmed, would further solidify Trump's economic footprint on the Fed's policy direction, at least temporarily. While the Fed is technically independent, having more aligned voices on the committee shifts how debates play out internally and how policy decisions are ultimately shaped. So, what could change with Miran in the room? For starters, the conversation around interest rates. Inflation remains above the Fed's 2% target, and there's debate over whether rates should stay high to cool prices or be cut to support economic growth. Miran's past comments suggest he may lean toward rate cuts, especially to stimulate trade and consumer spending. That could set up tensions within the Federal Open Market Committee, especially if inflation ticks up again. Powell has stated that keeping the Fed's independence intact is essential, and that monetary policy must remain data-driven, not politically motivated. But if Miran joins the voting bloc pushing for earlier cuts, it could tip future decisions in Trump's preferred direction. Financial markets reacted swiftly to the news of Miran's nomination. Bond yields fluctuated, and the dollar dipped slightly amid concerns that the Fed could move away from its inflation-fighting stance. Investors are already navigating uncertainty due to global tariffs and rising commodity prices. Adding a Trump-aligned economist into the Fed's leadership mix, especially one with outspoken views, adds another variable to an already complex environment. Some analysts worry that the Fed's perceived independence could be compromised, even if technically it remains separate from the executive branch. That perception alone can shift investor behavior and shake confidence in the central bank's neutrality. A big question making the rounds is, could Trump try to fire Fed Chair Jerome Powell? The short answer is no, at least not easily. By law, the president can only remove a Fed chair for cause, which means legal or ethical misconduct, not policy disagreements. Still, rumors have circulated, especially after Trump criticized Powell over the cost of $1 billion renovation at Fed headquarters. Some speculated that this was an attempt to build a case for removal. Powell has denied any wrongdoing and emphasized transparency throughout the renovation project. For now, Powell remains in place, but the growing tension between the Fed and the administration is something both markets and the public will continue to watch closely. Both Powell and Bowman have publicly defended the Fed's independence, with Bowman recently telling CNBC that monetary policy must remain free from political interference. Powell echoed that sentiment at the Fed's most recent press conference, noting that the central bank's autonomy has served the public well. Still, with growing political pressure, a shifting board dynamic, and high-stakes decisions ahead, some experts worry that the Fed could slowly lose its institutional independence. If decisions begin to reflect political priorities more than economic data, it could set a precedent that weakens the Fed's credibility in the long term. That's why Miran's nomination, even if short-term, has deeper implications than it might appear at first glance. Looking ahead, Stephen Miran's nomination will likely move quickly. Because it's a short-term appointment, filling an already vacant seat, it may not face the same delays as full-term nominations. If confirmed, he'll immediately join the Federal Open Market Committee and take part in upcoming decisions on interest rates. His influence, combined with the current uncertainty around inflation, tariffs, and economic growth, makes his role one to watch closely. Whether you're an investor, business owner, or everyday consumer, what happens inside the Fed boardroom impacts your wallet. One seat may not seem like much, but in a split committee, one vote can make all the difference. Although Stephen Miran's term is technically limited, set to expire on January 31, 2026, it still comes at a strategically critical moment. The next 18 months are packed with pivotal economic decisions, including multiple interest rate votes, responses to inflation data, and a highly anticipated presidential election. While it's not uncommon for presidents to make short-term appointments, this one could have outsized influence. Even after Miran's term ends, the decisions he participates in could shape the economy's trajectory for years. His presence might also set a precedent for how future administrations fill vacancies in key institutions with short-term, ideologically aligned picks. Critics argue that this undermines the spirit of institutional neutrality, while supporters say it's simply a legal, smart use of executive power. While the White House and Trump's team have praised the nomination, reactions on Capitol Hill